Welcome to our AFSL series. In today's video, we're going to discuss how you can determine whether a foreign client meets the definition of a wholesale client. Firstly, let's start with talking about what a wholesale client is. When providing financial services, the Corporations Act distinguishes between two different types of clients, retail and wholesale. The Corporations Act includes a presumption that all clients are retail clients unless they can be qualified as a wholesale client. There are many categories of wholesale clients, so let's take a look at some of the tests that may be relevant to your foreign clients. Firstly, let's look at the price or value test. This is the simplest test and involves ensuring that the price or value of the financial product or service exceeds 500,000 Australian dollars. However, this test does not apply to risk-based products such as life insurance or if the value of the product is sourced from a superannuation fund. Also, if you're a CFD issuer, you cannot use this test. Secondly, let's look at the size of business test. This test involves ensuring the foreign client to which the foreign product or service is provided for is used in connection with a business and that the business employs 20 people or more. Where the business relates to the manufacturing of goods, the threshold increases to 100 people. Thirdly, let's look at the net worth or income test. Under this test, the client must be able to demonstrate they have gross income for each of the previous 2 financial years of at least 250,000 Australian dollars or net assets of at least 2.5 million Australian dollars. These figures need to be certified by a qualified accountant, and you cannot be providing the service or financial product in connection with the client's business. To satisfy this test, the certificate issued by the qualified accountant must be given within the preceding 2 years. This means if you qualify a client under this test, you need an updated certificate every 2 years. This test relies on the client's net worth or income being certified by a qualified accountant. Qualified accountants are those that belong to one of the professional bodies displayed on the screen and hold the declared membership classification and comply with the professional body's continuing professional education requirements. Qualified accountants also include members of the eligible foreign professional bodies displayed on the screen and have at least 3 years practical experience in accounting or auditing and are only providing a certificate to a person who is resident in the same country as the foreign qualified accountant, other than Australia. Fourthly, let's have a look at the sophisticated investor test. Under this test, a client may be classified as a sophisticated investor if the product or service being provided to them isn't provided in connection with a business, and you as the AFSL holder are satisfied that the client has previous experience using financial services and investing in financial products. It is important to note that when relying on this test, written statements must be provided and specific acknowledgements received from the client. It is incredibly important that you document how you have determined that the client has the appropriate experience to meet this test. And if you're a CFD issuer, client money from sophisticated investors must still be handled in accordance with the Asset Client Money Reporting Rules from 2017. Sophisticated investors are considered to be retail clients for the purpose of defining derivative retail client money. Finally, let's have a look at the professional investor test. This test requires that a client meet one or more of the characteristics outlined in the Corporations Act. Foreign entities are able to satisfy the professional investor requirements if they were to satisfy the requirements for a professional investor if established or incorporated in Australia. Let's have a look at a couple examples. Firstly, persons having or controlling more than $10 million in gross assets, including monies held by an associate or under a trust that the person manages. Secondly, listed entities and their related body corporates. Listed entities include companies, managed investment schemes, or other bodies included in the official list of financial markets operated in Australia. Currently, these are the Asia Pacific Exchange, the ASX, Chi-X Australia, the National Stock Exchange of Australia, and Venture Securities Exchange. Thirdly, exempt public authorities. Public authorities are body corporates incorporated in Australia that are public authorities. The fourth example are body corporates or unincorporated bodies that carry on a business of investments to the public. Investments must be in relation to financial products, interests in land, or the option to acquire such investments. So what do you do if you're planning on classifying a foreign client as wholesale? It is extremely important that if you intend to classify clients as wholesale, that you ensure you keep appropriate records and obtain the necessary documentation from your foreign client to evidence that they satisfy the necessary criteria. This might mean keeping records of their investment to prove it meets the price or value test, obtaining HR records of the client's business to determine its size, liaising with the client's accountant to ensure you have an up-to-date certificate evidencing their income or net assets, obtaining trading statements or portfolio reports in relation to your client's previous experience, or conducting public searches on your client across a range of databases. If you have any questions about today's video, head on over to our website where you can talk to a member of our team via our live chat service. Don't forget to subscribe to our channel so you don't miss out on the next video in our AFSL